Hello and welcome to Market in a Minute, May the 8th, 2025. The one thing technical analysis does not teach you to do is to try and predict the market. What it does teach you, however, is to try and understand the market, to interpret it. Today, for example, was a good day for Asian markets broadly, but a very bad day for Pakistani and Indian markets. For the KSE 100 index especially, it was a day of an epic, instructive, historic collapse. So let us employ our technical know-how to try and make sense of the direction of the index. Let's dive into the daily chart. So this is today's market action. Down 64.82 points, almost 6%, big bearish engulfing candle. But let's start our analysis from here. The shooting star that was formed on April the 4th. The following day saw this big crash and the market trading within this day's range for a few weeks. It broke above it very briefly, formed an evening star, and then was back within this day's range. Until yesterday, when it broke below it and then clawed its way all the way back to its lower range. Today it gapped up again and then fell like a stone. In doing so, it also broke previous support zones. The one here on February the 6th and also the one here on December the 20th, making this a big fall. Also notice this, within this range, the market kept making lower highs and lower lows until it finally broke below it. Notice also that the market is now, at least as of today's close, more than 14% down from its historic high on the day of the shooting star on April the 4th. There are more factors piling in favor of a bearish outlook for the market. Look at the RSI. It is now firmly in oversold levels. Just for perspective, the last time the RSI was at this level was in December 2022. Since then, it has been above this till today. Now notice the RSI again. It is now firmly in the 60 to 30 level, which is formally in technical analysis known as the bearish zone. Also notice the Fibonacci analysis of this zone and how the indicator respected different levels, especially the 50% retracement zone, before turning down very sharply. All this shows a lot of uncertainty and volatility in the market. Let's check out the volatility now. First, see the 14-day ATR at 2952 points, which means, like it says over here, that it would not be improbable to see a move to the magnitude of 3,000 points in either direction when the market opens tomorrow. Also notice how the Bollinger Bands and the Donchian channels are now suddenly exploding wide, showing increased volatility. Also, one more thing, the ADX now at 2740 shows that the downward trend is strengthening. All of this is now giving strength to the argument that as opposed to expectations of a reaccumulation, which might still be possible, by the way, the evidence, the force of evidence, and especially the depth of knowledge that can be gleaned from indicators, especially momentum indicators, is now beginning to show that the market is now firmly, finally, after a long time, technically, in a bearish zone. So, sell on strength should be the mantra. Keep watching the market. Thank you.